Tesla shares on the rise. It's after reporting second quarter delivery numbers on Wednesday. Those missing the street's expectations. For more, we're going to bring in here Tom Narayan. He's global autos analyst at RBC Capital Markets. Tom, always great to see you, sir, on the show. So Q2 deliveries, 384,000, Tom. Maybe not as bad, Tom, as some on the street feared, but I'm curious, how did that compare to your estimate, Tom?
Yeah, exactly. I think you nailed it. I think people like us, people like myself, I think may have had a higher number. I think it was like around 405. I saw 390 in there. But the investor group, the buy side is really what matters, right? And they were calling for, I think, something around 384. Which is what happened. I was actually calling for a 366, so it actually beat my number. You have an April number, you have May across the three regions. It's just June was really hard to predict. That's usually the month that's hard to do. And it looks like in the US, it came in line. And then it looks like China, it came in very strong as kind of I was thinking could be. And, it beat me, I think, in Europe, which is surprising, right? Because that's where a lot of the news was on potential headwinds there. So it's looking all in all like, pretty decent number. It's probably why the stock is up.
And so when your clients ask you, Tom, they say, Tom, what does this core EV business look like ahead? What do you tell them? Because we got the revamped Model Y, we got the new affordable models. What do you see?
Yeah, I mean, look, the Model Y, from what I've read in the press happening in Europe, actually did pretty well. The new refresh in certain countries, I think like Norway and other countries. So it looks like that actually is helping things. It didn't boost demand that much in the U.S. It looks like a decent number in the U.S. So it looks like the Model Y refresh is having some positive impacts. But this new affordable car to hit in Q3. I do think that will be very important. That should boost some volumes. And then, as we know, in September, it looks like we'll be losing the EV tax credit. That could create some kind of pre-buy effect, right? So Q3 may actually wind up being a little bit stronger because I think folks were thinking that EV credit would be lost in December timeframe. It's looking like it's kind of September. So we could see a higher Q3. But all in all, for the full year, I think everybody's expecting it to be slightly down. I'm down like 7%. I think consensus is down like 8%. That's kind of like the kinds of topics that people have been asking about.
So the big beautiful bill, the Senate version would kill that EV tax credit by September, Tom. Beyond just Q3, I'm just curious, as you try to model out long term what the end of that EV tax credit, what does it mean for Tesla?
Yeah, I mean, I think actually that's more of a near-term dynamic. People structurally aren't buying EVs because of a tax credit, right? They're buying EVs because of other reasons. But sure, it'll have an impact, right? So that's probably why, volumes are down, this year, Q4 impacts. But remember, you have that offset of this new affordable car that's coming in. They haven't had a new model in years, like a proper new model. Now, I don't know how dramatically different it will be, but the price point does matter. Maybe that does offset some of the impact of losing the credit. So, I don't expect this huge, robust growth next year, 2026, mid-teens, something like that. But really longer term is really where I think you could see EV sales, not just for Tesla, but across the board increase because battery prices coming down should have a big effect. Now, that's not happening for near term anytime soon, but longer term, I think it's reasonable to be constructive. We're in this little bit of an EV slowdown in the US. But remember, Tesla sells a lot of cars in China where EVs are booming, and they did really well in the month of June. And then Europe is EV central as well. So I think probably they'll be all right. It's just a little choppiness near term.
You mentioned China, Tom, and there was such an interesting comment from Ford's Jim Farley. I don't know if you saw this, and I want to get your take on it. Yeah. And Farley was talking about the Chinese EV industry. And he was talking, Tom, about how he's made multiple trips over there. And here's how he put it, Tom. He said, It's the most humbling thing I have ever seen. This is Farley. He says they have far superior in-vehicle technology. You agree with that?
Yeah, definitely. We just recently initiated coverage on Porsche, actually, just last week, and China was the focus. There's a car, the Xiaomi, SU7, which competes head-on against Porsche's main, Porsche Taycan, and it's priced like a quarter of the price with the same battery range. How do you compete with that, right? So I would agree right now there's a huge advantage in China that a lot of these, brands have, BYD, et cetera. They're vertically integrated. They have the best tech in the vehicle. They have a big advantage on battery prices. And so, but look, remember, the government's subsidizing a lot of this. They have a lot of other advantages being vertically integrated. And battery prices, that spread between what the Chinese companies pay and what the rest of the world pays, that's going to narrow because it's only so low you can get on battery prices. Also, the global players in China are going to learn how to sell to that Chinese consumer, use the local ecosystem on tech, improve their products, vertically integrate as much as they can. And look, at the end of the day, if you are a wealthy Chinese consumer, there is something special about a luxury German brand. There still is. It still has value. So yeah, look, it's tough sledding right now, but we don't see, like the German OEMs, for example, just losing China completely. We probably see them continuing to lose share a little bit near term, but at some point, they'll get better at it, and you'll get some sort of equilibrium.
Tom, always great to see you and to have you on the show. Thank you.
You got it.
We have breaking news. Tesla reporting second quarter deliveries falling short of estimates. Yahoo Finance's Brooke DePalma and Jennifer Schonberger join me now with the analysis as we're seeing shares of TSLA still move higher pre-market. Brooke, give us a rundown of the numbers here.
Investors certainly pleased with these results, even though 2Q deliveries were just ever so slightly less than what the street had expected. Shares are up roughly as much as 6% in the pre-market, now backing down a little bit in the early hours trading session here. If you take a closer look, that number came in at 384,122, slightly lower than Wall Street's expectation there. If you take it into context here, that was far higher than what we saw delivered in Q1 at around 336,000. But this is also far less than a year prior when we saw vehicle deliveries in Q2 coming at 444,000. Just last year. If you also take a look at 2Q production as far as vehicles go, we saw that number come in higher than what the street had expected at 410,244. Now, other model deliveries slightly less than expected at 10,394. But really, this comes at a time when Tesla is facing this growing competition from Chinese car makers like BYD, Bird there, and also you have General Motors, you have Volkswagen, you have BMW really looking to get in on this EV market here. We also heard this morning from Tesla that specifically within their Shanghai factory, they saw their first increase in vehicle deliveries in that market for the first time in a year. And so Wall Street certainly pleased with a bit of optimism here in early hours, pre-trading open.
Jennifer, I want to bring you back into this as well here, especially as we know that this is going to be critical on the EV mandate side. So on the EV tax credits that have been rolling off, but ultimately that's still a part of what has Elon Musk and Trump feuding publicly right now.
Yeah, Brad, once one of the president's closest advisors, Elon Musk, slamming that big, beautiful tax bill. And of course, we know that that tax bill is going to phase out those EV government credits by September 30th if the Senate bill passes. So that would be quite a rollback from initially 2032. And ostensibly, that takes away a bit of the incentive that makes some of these EVs affordable for Americans to purchase and could hurt Tesla's business. For that reason, President Trump thinks that is why Elon Musk has been criticizing the tax bill so much, even though Elon Musk has said that it's really the fact that it drives up the deficit and the debt is what concerns him. But The two have been trading barbs so much that it's escalated to the point where the president has now pondered publicly about doging the initial creator of Doge, Musk himself, saying that he doesn't think there's any human being on Earth that gets as much government subsidies as Elon Musk does, whether it's Tesla or SpaceX or any of his other businesses. And so that's certainly a shot across the bow there to Elon Musk. You don't really want to get on the president's bad side, right, Brad? Don't poke the bear.
Tesla, the EV maker, is widely expected to post weak delivery results on Wednesday. The figures could be so weak that JP Morgan analyst Ryan Brinkman is out reiterating a street low price target on Tesla of $115. For perspective, Brinkman's price target assumes 62% downside from current price levels. Calling up the Yahoo Finance platform, you can see how bearish the street is right now in Elon Musk's creation. Analysts' earnings estimates have continued to trend lower over the past 90 days. If deliveries are bad, those numbers could be cut further ahead of Tesla's second quarter earnings release in a few weeks. Still with me, my roundtable of pros, Chad Morganlander, Ali Canal, and Brooke DePalma. Chad, I'll come to you out of the block on Tesla. Is it fair to say this stock is detached from fundamentals?
Yeah, to say the least. That is true, Brian. One has to be mindful that there is a very high expectation for Tesla over the next several years. Let me give you some statistics for this. First, Tesla's trading at about 11 times sales, and the expectation is that they're going to have revenues this year of $95 billion, and then $116 billion next year, and then the following year for 28 of $140 billion. So there's a big embedded expectation of growth there. We would be very concerned about this, in particular because they have competition. The Chinese are manufacturing cars like they manufacture toys.
How do you explain, Chad, then, still the enthusiasm for Tesla shares? You saw JP Morgan out this morning, $115 price target, lowest on the street, yet the stock's almost at $300. You had Wedbush, Dan Ives out this morning reaffirming a $500 price target. And earnings estimates are coming down. Deliveries are going to be weak. This year could be awful financially. Help square that for us.
Yeah, so it's a good company. It's just that it's very confusing. This reminds me of the 90s with barter revenue, where things didn't make sense and it was disconnected. People are looking at this company for their data and that it's a software company. And that's true. It is a software company to a certain degree, but it's also a hardware company. Hardware when it comes to cars, or if it's going to be getting into robots. There's going to be a lot of competition, and it doesn't mean that they're not great and they're not on the cutting edge. It's just the valuation is disconnected from reality. This too shall pass over the next 3, 5, 7 years, but expect a lot of volatility within the stock.
Key to unlocking that Tesla bull case, Brooke, is that they have autonomous cars throughout the United States that compete with Uber and Lyft. Would you get on one of these?
Well, certainly I would try one of them just because I'm a bit curious.
That's all they need, Brooke. That's all they need. They just want you to try it. They just want you to try it.
Hey, curiosity is there, but when you think about that market at large of autonomous vehicles, Bank of America out with a note today saying that by 2040, this autonomous vehicle market is $1.2 trillion. And what investors here, as you can see, the stock down roughly 6% at the opening trade here. That's largely because of what Elon Musk has been getting roped into with the Trump administration, all that tax bill, everything going on there. But investors really hoping that he focuses in on this opportunity within the autonomous vehicle market here.
You're looking at video of Tesla's first fully autonomous delivery of a car. This is a Model Y driving itself from the Gigafactory in Texas to its new owner's home about 30 minutes away. Tesla is in focus this week ahead of its second quarter sales results. Current consensus shows deliveries falling 12% from a year ago, but that figure would be 16% above its first quarter numbers. The company contending with continued demand weakness and brand issues surrounding CEO Elon Musk's time working for Doge under President Trump here. And so as we're considering where these estimates could potentially come in at, one of the huge considerations as well going forward is just the appetite as well for car purchases. And this was something that actually stood out in the most recent Consumer Confidence Index data as well from the Conference Board, as auto purchases were one of the areas that consumers were clearly more pensive about making that purchase decision right now. However, compare that to earlier in the year where we were tracking very closely some of the marketing efforts around companies who were saying that, oh yeah, these prices are tariff-free, and so thus trying to spur some demand there. But going forward from here, the larger consideration that investors might have for Tesla is not just the prices that consumers are willing to clearly opt in for an EV at, but more long-term, perhaps, what they also might need to be able to see in terms of new vehicles that come forward from Tesla. There's supposed to be another mass market vehicle that Tesla is set to unveil, this after its robo-taxi event, and ultimately has started to get some data as well as some of the initial allegations that have come forward around some of the tests that have taken place within that specific area. And so as we're looking through all of the test drives that do take place, autonomous vehicles delivering themselves at home, and then additionally the robo-taxi in the early phases in certain cities. Of course, remember, California and Texas were key to what Elon Musk was mentioning at the beginning of the year. And so delivery on that plus a new mass market vehicle are at the top of the checklist here for Tesla investors. Shares jumped on the back of that event where they ultimately did kick off some of the robo-taxi driving. However, going forward from here, they do face still some stiff competition in the form of Google's Waymo and, oh yeah, perhaps some other car companies that could hop into the mix in the future, and ride-hailing companies like Uber and Lyft, who have all talked about how that can bring down their operating cost per mile even since they've been going public. So, all that considered, we're keeping close tabs on shares of Tesla and self-delivering cars here in the future.
Yeah, when Tesla made its 2010 public debut, it was considered a moonshot. The company had just one car on the market, the original Roadster, and plenty of skeptics. But Tesla quickly shifted into high gear, first with the Model S, then with the debut of the more affordable Model 3, which marked a big turning point in consumer adoption. Tesla wasn't just a niche luxury brand anymore, it became a mass market EV powerhouse. Behind the scenes, CEO Elon Musk bet big, building out gigafactories around the world to scale battery production, pioneering autopilot, Tesla's semi-autonomous driving system, years before its rivals. And the company also flipped the script on how cars are sold. No dealerships, just direct-to-consumer online sales. That created a lot of hype, and it's become one of the most recognized brands on the planet. At one point, the company even became the most valuable automaker in the world, briefly joining the $1 trillion club in 2021. But it hasn't all been smooth sailing or driving in this case. Production delays, price cuts, and rising EV competition, especially from Chinese rival BYD, have raised new questions about sales growth and margin pressure. More recently, Elon Musk has faced criticism over his erratic behavior, unpredictable relationship with the president, and distractions caused by juggling his former government role as head of Doge alongside his other ventures, including the social media platform X. So, what is next for Tesla? Well, investors are now watching for growth in Tesla's AI and robotics bets, like its Dojo supercomputer, self-driving software, and even the Optimus humanoid robot, which Musk says could become more valuable than the car business itself. And according to analysts tracked by Bloomberg, many on Wall Street remain bullish. The company has 30 buy ratings, 17 holds, and 14 sells, showing there's still plenty of faith in Tesla's future, even amid all the challenges ahead.
Here's who's not happy about the big, beautiful bill. We know that. Elon Musk, not a fan. And President Trump taking to social media to respond to Musk's ongoing critiques of the bill, focusing on the government grants that Musk companies receive. Without subsidies, Elon would probably have to close up shop and head back home to South Africa, wrote the president. Yahoo Finance' head of news, Miles Udland, joins our team coverage for his take on the second round of Musk versus Trump. It is a second. Two men enter, one man leaves Musk, two 800-pound gorillas. So Musk says this bill is insane. I think utterly insane was the exact words. Yep. The debts, the deficits. Trump fires back, which I think we all saw coming. Yep. Says you're just upset about the EV tax credit. What do you make of it?
Well, I think it's kind of exactly what you could have seen coming from many months ago, even before the election, which is that these are two of, let's say, the most self-assured folks that we have in American public life. Confident, yeah, at the very least, and I think with good reason. But typically, those are not going to be longtime allies, especially in the trenches of things like trying to get a large piece of legislation through. Now, as we know, Elon Musk was interested in joining the government to make it more efficient, and obviously a bill that adds $3 trillion plus to the deficit is not something that's going to interest him. But I think bringing it back to the stock market, Tesla stock down 5% today. The stock's down 25% this year. And investors continue to say they don't like the fact that Elon Musk and Donald Trump are going at one another, and that Elon continues to be, I don't want to say distracted, but at the very least, preoccupied, occupied, interested. Like, he's spending a lot of time on these issues. And we're going to get sales numbers from Tesla tomorrow that the street doesn't think, or delivery number, excuse me, the street doesn't think are going to be very good. There are a lot of problems with Elon's core business, Tesla right now, that he said a couple months ago he was going to be fully committed to. I'm sure he's spending more time with those businesses, but the market's judgment in the time since he has, quote unquote, returned to Tesla has not really, full-throatedly gone back and said, you know what, we believe it. He's spending all his time there. And I think this latest spat is a reminder that Elon is not done picking this bone of kind of Trump's approach to government spending and how it doesn't align with his own, and the stock's performance reflects that.
Why do you think Musk, though, is engaging in this approach, Miles? He's making it so public. He's going on X. He knows he is, I'm going to put it nicely, upsetting, frustrating the president of the United States. I would think he thinks, well, I can have a vote, I can have an impact on the votes. I'm worth $400 billion, and people are going to listen to me.
Well, he owns X, so he's got to go on. It's good for business, for him to go on that. But, there was something that he retweeted today, re-X, whatever we're going to call it. Reposted, I think, is the formal term. There's a market on Kalshi, about 40% odds say that Elon will start his own political party. I mean, I think that's kind of what it's trending towards. Now, there's an argument, and we don't need to go into the full political strategy of this. A lot of people have come along with a lot of money and said, we need a third way in American politics. There's many of them out there still. It's not exactly an original idea that you get involved in the trenches of American politics and you say, you know what, guys on the left, I don't like them. Guys on the right, too extreme. I need to find the middle ground where everyone sits. Maybe he'll land there and that's fine. And I'm sure he's not going to stop spending money on U.S. political elections. And I think he probably enjoyed and can see the impact of his involvement in the process. But it's very clear that, and some of Elon's colleagues have talked about this, going back decades, he's always been obsessed with how the U.S. government spends its money and trying to figure out, could it be spent better? Doge is certainly an outgrowth of that. He's still a young man. He's not done with this project. So this is one bill, this is one moment in time, but I don't think Elon's kind of interest in figuring out, are there ways for the U.S. government to act more fiscally responsibly, and how can he influence those? He's not done with that experiment. But the concern today is Tesla's down 5%. And investors don't love that he's not done with that experiment in this iteration.
Lou, your thoughts on this? I'm also curious, Lou, how this sort of plays out as kind of branding. And what I mean by that is how much time we spoke on this show with analysts who, when Musk was tight with Trump, they were saying, oh man, that's a bad move. You're alienating so many Americans. There's Sheryl Crow. She's selling the Tesla. She's so upset, donating the proceeds to NPR. She's not going to have it. But now you upset Trump. So how do you think through the branding, the marketing, the implications?
Listen, even the best soap opera writers couldn't write one with more drama than this. I think you guys are being a little bit more diplomatic. I mean, these are two megalomaniacs with a lot of money that can't keep
They're just confident. I thought we agreed it was confident.
Okay, well, I'll go with that. Merriam-Webster had a different synonym for me, but they can't keep their fingers off the keyboard, really, right? I mean, Musk, to your point earlier, everyone wanted him out of politics, out of the government. You're interfering. Focus on the business. He gets out, extracts himself. Tesla goes on a great rally. The fundamentals start kicking in, and now he re-engages. So I think, look, he's operating under all press is good press right now. He's a solution. I don't think he can help himself, but I do think, as a shareholder, I would stand back. I'm not a shareholder. I don't bet against Musk, but I don't love Tesla. As a shareholder, I'd want him to be 100% focused on what's going to drive the business, and that's not EVs. I mean, you talked about the delivery report tomorrow. Not good expectations. It's humanoid robots and self-driving cars. That's the future of Tesla, for it to live up to the valuation that it's got, roughly a $1 trillion market cap, right? So I don't know. I know both of them have advisors that give them good advice in both ears. I don't think they ever listen. So I don't know that us opining here will get.
I wouldn't call those two of the more advisor-heavy folks that we've got out there in the world.
Right. All right, Miles, thank you very much. So the drama continues. We'll have you back for more on it. Welcome to Goodbye or Goodbye. Our goal here to help cut through that noise to navigate the best moves for your portfolio. I'm here now with Prairie Executive Vice President of Market Strategy. That would be Lou Bassanis. You're bullish on Symbotic, Lou, so let's start there. This one, by the way, has already had quite the move. I mean, folks love this thing. This was let me get this right, 70% already this year. But Lou, you say, you know what? You stick with it. You buy it. So let's run through the reasons. The first reason, blue chip adoption.
Yeah, look at this. This is an automation, warehouse automation and robotics and AI play. They've got customers including Walmart and Amazon. So you have the best of the best that have huge scale that can give Symbotic scale very quickly too. So I think you want to go with blue chip client list, not some early adopters that are unproven to deploy it.
Second reason you say it's a buy. Let's go through that. Mega backlog, 22 billion.
22 billion is almost equivalent to the company's entire market caps, right? So you have not the potential of growth, you have locked in growth here that they can work through. It's more about conversion than execution. So I love that from the standpoint of we don't have to guess where sales are coming from. We know where they're at. We can predict and model that very, very accurately across the quarters.
And final reason, scaling now with robots.
Yeah, robots are all the rage apparently, right? Everyone loves humanoid robots. I don't know about you. I'm not going to adopt it early. I'd rather look towards industrial robotics and automation. That's what Symbotic allows you to do. It's scaling now. It's happening. It's about a $30 billion market that exists today, growing to 60 plus billion. We know it's happening. It's real. It's not on the come like a lot of this humanoid robot talk.
All right, so you convinced me, Lou. I'm ready to commit capital. Before I do, though, walk me through the downside risks I need to think about.
Yeah.
Did you say heavy customer concentration?
You know, sometimes your strength can be your biggest weakness, right? So you have Walmart that accounts for the majority of this backlog. They're going to roll it out through all their distribution centers. Each one costs about $365 million. So if you start adding that up across 45, if Walmart changes its plans or slows the pace, that's going to slow the pace of growth for Symbotic. So you're wed to Walmart's plans here. That could work against you.
All right, so buy Symbotic.
Yes.
So let's move to one you would avoid. Now this one, Tesla, this should get some response on X.
Yeah.
Let's run through the reasons you say you would avoid Elon Musk's company. The first reason, I think we can all, political headline risk, certainly something we're all talking about today.
He can't avoid it. He can't help himself, right? And, you know, just go start another company. Get out of politics, right? You're doing a lot more for humanity there. I think you're going to see the share price react to his latest tweet and President Trump's response on Truth Social. So I don't like to have that mixed in with my investment money.
Second reason you say is avoid demand destruction.
Yeah, you're seeing it, right? We're going to get delivery numbers tomorrow. The numbers coming out of Tesla have not been great, even though you've seen other Chinese EV makers doing well. You're seeing a slowdown in Europe as well. I think that first mover advantage is wearing off. They've gotten a premium market valuation for being a first mover that you're going to see keep winnowing and shrinking.
Third and final reason you say Tesla is one to avoid questionable growth prospects.
Listen, if you look at patent filings for humanoid robots, Tesla is not at the top of the list. They only have about 16 patent families. There's a couple other private companies that have hundreds of patents. I don't think Tesla is going to be a huge player in humanoid robots. They're going to make all the headlines for it, but I think that's what everyone's banking on is self-driving cars and these Optimus humanoid robots. I just don't see it. I don't want to invest on what's on the come tomorrow. I want to invest on what's happening today.
Now, before you avoid it, though, what would be the upside risk you should think about?
Man, I don't want to say he's the best salesman in the world, but he is the great vision caster. He's got a loyal following of shareholders. If he can paint a picture of how Tesla grows into its valuation and keeps growing, I think you're going to see that. The shares will rally once everyone knows his focus and attention is on the company and not President Trump.
It's always an entry point because when you talk about this company, Lou, and I'm hard pressed actually, at least right now, to think of another company where there's a parallel like this. Musk is Tesla, Tesla is Musk.
It's like Steve Jobs and Apple, right?
1,000%. And people, there's some strong group of investors, and they go there because they believe in Musk and his vision, and that yes, the future it's robo-taxi and robots, and he's going to win. And that group of people will literally look through those delivery numbers.
Yeah, it's cultish to me, but I get it. It's faithfulness to them. So I'd rather just not. There's other opportunities out there. I don't want to engage in that.
Fair enough. All right, so buy Symbotic, avoid Tesla, according to Lou. Thank you all.